In the meantime, Maneesh Deshpande, Barclays head of U.S. equity strategy, tells investors to increase holdings of tech giants. Maneesh joins us now. Maneesh, what is the inflation thesis that you have on this call?
So the inflation thesis is, I think the baseline is certainly what the consensus and Powell has said, is that it's going to be transitory, and then by the time we get to the next year, we should get back to normal. That this is a temporary spike, it's just a question of getting through the ironing of the kinks of the system that have been shut down for the last year.
So if that's the case, you think tech, talk me through the argument around why you want to rotate back into growth.
So I would like to distinguish between, like I said, secular versus cyclical growth, right? So what we are saying is that the COVID recovery trade, i.e. sort of the resurgence of stocks that had gotten beaten down in 2020, that COVID recovery trade to some extent is now done. So now we're going to get back to sort of mid-cycle growth, where you really want to get back to secular stories. So that is the fundamental thesis why we want to rotate back to at least parts of tech. The second argument is also in terms of valuations. So if you look at valuations for tech, of course, they're always going to be high as compared to the rest of the S&P, but they are back to 2019 level. Mm-hmm. While those for industrials, and especially some of the consumer discretionary, for example, are very high still compared to that. So that part of the stock market is still pricing in a very robust recovery. We're not denying that the recovery is going to continue, but perhaps it's getting a little bit extended.
So where does that leave things like energy and banks? Like, what do the price to earnings ratios mean for that? And then in terms of your view of the next, say, 6 months in terms of growth?
So I think we like banks. That's still one of our overweights. And the reason for that is that, we do want to have some exposure to the economy. And we think among the other cyclical stocks, sectors, so particular consumer discretionary, industrials, mining, and energy, we think banks are the best position for that. Because there is still the tail risk that you could have high inflation and high rates. That would benefit the banks. At the same time, the strong economy will also benefit the banks. So among the cyclicals, we like banks. Then again, I want to caution that we don't like all kind of tech. So the fan mags, the big, large e-commerce kind of beneficiaries, those are the ones we like. If you look at other parts of tech, something like software or hardware, they are actually still quite expensive. So we are still market with those.
Do you think that concern around regulation is now priced in? Do you think all the risks around this sector are now pretty well understood?
So for the tech, you mean? So I think
for those big cap techs, the tech stocks that you're talking about.
Right. So I guess it's a bit of a question of I think people have become sort of numb to that. So this has obviously been an ongoing story. Now it's certainly a headwind, and we are in the middle of regulations, and sort of there was the Congress is going through hearings on that front. So that's certainly an overhang. But still, that's not going to happen anytime soon. It's going to take, at least 6-7 months before we get anything meaningful there. So at least in the medium term, we do think that these are attractive.
Hey, Maneesh, something that we've been talking about this week, and I wonder if you could help us understand how you're going to play that, is if you take a look at, say, the equity market, the dollar, yields, like from the Fed last week till now, it's been like a round trip. Within that, though, there's been some volatility and a lot of churn within the market. How do you take advantages of those dips when volatility is still at like 15?
So I think you have to, I think, again, there's going to be short-term rotations, which will sort of, head fake you. I think the way we at least advise, at least our client base, is to stick to the medium term. Don't get panic and sort of turn around from the week-to-week news. I think you need to focus on the medium term, and that's what's important. And that's why sort of these valuation metrics, looking at a little bit ahead, give you a bit of an anchor.
Is the risk now that the Fed acts sooner or that the Fed acts later?
I think the risk is that it would be, so that I would say the baseline of sort of having perhaps a couple of hikes by 22 or starting to hike in 23, that's the baseline. If you're talking about risks, I think the tail risk really for the market is that they would start sooner, right? So again, our baseline view is the inflation is going to be transitory, but we just don't know. And I think even Chairman Powell has acknowledged that we don't fully understand what is going on. So can this get extended? Can that start feeding into the other parts of the inflation basket, which has been sort of immune to that? I think that is the key tail risk. So I think that's what you would worry about. Again, from that perspective,
Maneesh,
I think banks, from an inflation perspective, are an attractive way to position for that.